welcome to this explainer. Okay, let's just dive right in. Imagine you've just navigated the thrilling but honestly kind of complex journey of setting up a brand new company in Vietnam. You've got your certificates, your product or service is absolutely ready to go, and you are itching to start bringing in some revenue. But there's a massive, high-stakes hurdle standing right between your new business and that very first paid invoice. And that hurdle? It's tax compliance. So today, we're going to completely demystify the reality of e-invoice registration in Vietnam. We'll take what feels like a giant puzzle of bureaucratic requirements and turn it into a clear, actionable roadmap for your newly founded company. To do this, we've broken this entire 12-step process into a highly structured roadmap. We'll kick things off with the e-invoice mandate itself, move into phase 1, which is your essential setup, then hit phase 2 for the registration process, and phase 3 covering testing and issuing. Finally, we'll wrap up with some pro tips on avoiding traps and optimizing your setup. All right, Section 1, the e-invoice mandate. Let's establish exactly why we need to focus on this literally the moment your company is incorporated. So, picture this. You've got your Enterprise Registration Certificate, your ERC, and your tax identification number. Your legal entity is officially born. Naturally, you might be wondering, great, so can I just start billing now? Is having those basic government documents all it really takes to start making money and firing off invoices to your eager clients? Well, not so fast. It's a super common misconception for new, foreign, and local investors alike. The absolutely crucial point here is that a company cannot legally issue VAT or sales invoices until its e-invoice registration is formally approved by the Vietnamese tax authority. Your business is effectively on pause from a revenue standpoint until you get this sorted out. But let's look at the why behind all of this. Vietnam has fully transitioned to mandatory electronic invoices. Why put every single business through this? Well, it's not just red tape. It's actually a massive modernization effort. E-invoices drastically reduce administrative costs. Say goodbye to printing and mailing stacks of paper. They actively prevent invoice fraud, which improves overall tax transparency across the whole economy. Plus, this system enables real-time communication with tax authorities and radically simplifies your auditing down the line. It's all about bringing the economy into a digital, streamlined future. And just to ground us in the legal reality for a second, the primary regulations running this whole show are Decree No. 123/2020/NDCP and Circular No. 78/2021/TTBTC, along with guidance from the General Department of Taxation. We are dealing with strict government compliance here. Following these rules isn't an option. It's the literal foundation of operating legally in Vietnam. Okay, now that we understand the mandate, let's jump into Section 2, Phase 1, Essential Setup. This phase covers steps 1 through 4. It all kicks off with establishing your company to get that ERC and tax ID, which automatically generates your tax profile. Armed with those, you'll open your corporate bank account and then purchase a digital signature. Finally, you're going to use that signature to register for electronic tax services right on the General Department of Taxation portal. This officially turns on your ability to interact with the tax authority online, and honestly, you absolutely cannot move forward without this foundation. Now, here's a little insider tip for you. Legally speaking, once you have your ERC and TIN, you could just run straight out and buy a digital signature. But practically, you really want to get your corporate bank account open first. Why? Because you need a way to actually pay the digital signature providers. Plus, banks often bundle these services together, and let's face it, you're going to need that bank account for day-to-day operations and electronic tax payments anyway. So save yourself a major headache and get the bank sorted immediately after incorporation. With the setup out of the way, we're on to Section 3, Phase 2, the registration process. This is where you officially raise your hand to the tax authority. First things first, you have to choose an e-invoice service provider. Vietnam requires you to use licensed software providers that hook up directly with the tax authority systems. Next, you'll get your company details together and figure out your invoice symbols and templates. Once you have that locked in, you submit this registration electronically through your chosen software or the tax portal. And then, the waiting game. You just wait for the tax authority to review your status and, hopefully, approve your registration. I really want to pause here for a second to emphasize your digital signature. Whether it's a physical USB token that you actually plug into your laptop or an entirely cloud-based signature, this is the cryptographic key that makes your electronic submission legally valid. It proves to the government, without a doubt, that the submission came from you. You're going to use this exact same signature for all your future tax filings, social insurance declarations, you name it, even customs declarations. It is quite literally the digital pen of your business.
All right, once the government finally gives you the green light, we hit Section 4, Phase 3, testing and issuing. This is the fun part, the operational phase where you finally get to start moving some money.
First up, you'll configure your templates. This means adding your logo, formatting the layout, making sure your branding looks slick but still stays fully compliant. Then, and this is critical, you test the system internally. You want to rigorously verify that your digital signature works, your VAT calculations are 100% spot on, and that your XML files generate correctly before a customer ever lays eyes on them. When everything is totally flawless, boom, you issue your first legal e-invoice. But keep in mind, this isn't a one-and-done deal. You have to securely store and manage these electronic records for statutory compliance and any future audits. Issuing that first e-invoice isn't just clicking a send button. It actually involves a whole series of micro actions. You create the invoice, type in the specific customer info and products, let the software calculate the correct VAT, apply that all-important digital signature, and then submit the data to the tax authority, which happens almost instantaneously. From there, the system generates the PDF and XML files to actually send off to your customer. When all these little actions execute flawlessly together, that is the triumphant moment your business is truly operational. Okay, we've walked through the core 12 steps. Now, let's open our final section, avoiding traps and optimizing. We want to make sure you get approved on the very first try and actually turn this compliance hurdle into a serious operational advantage. Let's learn from other people's headaches, right? If your application gets bounced back, it's very often because of an invalid digital signature. The fix? Just renew or reinstall the certificate. Or maybe you accidentally skipped the registration of electronic tax services, leaving you with an inactive tax account. It could honestly even be something as simple as typing in incorrect company info that doesn't perfectly match your enterprise registration certificate. By double or even triple checking these specific elements before you hit submit, you can proactively avoid weeks of totally frustrating delays. But beyond just avoiding silly mistakes, we really want to optimize. The most efficient businesses out there don't just sit around manually typing out invoices all day. Instead, they integrate their e-invoice provider directly with their accounting or ERP software using an API. They automate the whole thing. So the moment goods are delivered or a payment hits the bank, the invoice is just automatically generated, signed, and sent. And above all else, they relentlessly maintain precise customer data. Because trust me, a single typo in a customer's tax code means you have to go through the incredibly painful process of issuing adjustment or replacement invoices. Get the data right the very first time. So, I'll leave you with this final thought. Is your new invoicing system going to be a compliance bottleneck, or is it going to be a catalyst for automated business growth? Registering for e-invoices in Vietnam is totally non-negotiable. But how you choose to implement it, well, that's entirely up to you. You can treat it like a really annoying chore, or you can embrace it as your very first major step into digital transformation, setting your new Vietnamese company up for efficient, highly scalable, and automated success from day one. Thank you so much for joining me on this explainer, and I really hope this roadmap helps you build an incredibly solid foundation for your business.